Hey everybody, Chris McMorrow. Today's video I'm going to talk to you about protecting the most important asset you have, which is your income. Now if you like this video, please hit the like button, and if you haven't already, please subscribe to get all the latest content and videos that I post out there, and click the subscribe button so you don't miss a new video. So let's get right into this, talking about protecting your number one asset, which is your income. When you're young, have a family, most of the time you're just starting out, you don't have that many assets to protect your income in the event of death, disability, extended leave of work, whether it's unemployment or whether it is a medical leave from work. And having protection against that income can mean everything in the world to you and your family. Today I'm going to specifically talk about protecting your income utilizing term life insurance. Now, term life insurance has been around for a very long time, and it is exactly what it says it is. It's a term life insurance policy that is set for a certain period of time, whether it's 10-year, 15-year, 20-year, or 30-year. I like to think about term insurance as renting an apartment where you're paying rent to live somewhere, and at the end of the day you're not really getting anything out of it. With term insurance, the premiums are low. For example, if you're in your 30s, for $500,000 of coverage for 20 years is under $30 a month. If you're 45 in good health, $500,000 for 20 years would be right around $40 per month, and at age 45, a 20-year policy for a person in good health would be roughly $60 a month. And again, obviously there's other requirements that go along with coming up with that premium number, but it is a little expense to protect your most important asset, which is your income, especially if you have a small family and you are one of the top, if you're the breadwinner of the family. If your income is not there, it could be devastating for your surviving family. So I'm going to talk to you a little bit about human life value. This is a figure that is determined by your age and your income. So I'm going to give you an example of this. Somebody that's in their 30s that earns $50,000 of income per year, they should have 20 times their salary as life insurance protection. So 50 times 20 times equals $1 million. So for someone that is 50 years old in your 30s should have $1 million of coverage on their lives. And the hypothetical reason for that is you can put $1 million, your survivor, if you were to pass, and in a hypothetical 5% CD at the bank, that would kick off $50,000 of income, which would replace your salary year over year. Now, again, everything should be specified to your situation. Again, these are just general guidelines that I'm giving. But so many times I see on social media of somebody unexpectedly passing away and they weren't properly planned, and you see the outcry for helping raise money for that person, for the family, for their education costs. One of the things that I have seen by delivering these types of life insurance checks to widows or the families of a deceased is it gives them time. Nobody knows realistically how you're going to react if your significant other passes away, what that will do to you from a emotional, physical standpoint. You may not be able to go back to work immediately in 6 months, a year. So having life insurance on yourself and significant other is a way for you to buy time as well while you're going through a grieving type of scenario. Again, everybody's different. Everybody goes through that differently, And I've seen it, and having delivered those death benefit checks to a surviving spouse has made all the difference to them, by taking a year off of work just to get themselves mentally prepared of life without their significant other, having the ability to pay off their children's student loans, and giving them the ability to start fresh in their careers at a young age and not have to worry about paying large student loan debts. So again, it's more so protection, and having this as part of your overall strategy while you have a young family, and have a need to protect your income makes a whole lot of sense. And given the true cost of term insurance, which is very inexpensive in the grand scheme of things, everybody should have some level of life insurance on them to protect themselves, their income, and their loved ones. If you have any questions on this, let me know. I'm happy to help go through your scenario to see what makes sense for you. You can contact me. I'll leave my contact information up here. We can set up a video chat or a conference call or a face-to-face meeting. Thanks again, and if you haven't subscribed already, please do so. See you next time.